Okay, so let's unpack this. I was looking at the calendar for 2026, and honestly, it's a bit of a strange convergence.
It is a really weird alignment, yeah.
Right, because in the Chinese zodiac, it's the year of the fire horse, which, is traditionally associated with turbulence.
Yeah.
But purely by coincidence, it's also exactly the 60th anniversary of the Idemitsu Maru.
Ah, the world's very first VLCC, the Very Large Crude Carrier.
Exactly. And it feels kind of poetic because right now, the supertanker market is celebrating that 60th birthday with what looks like an absolute frenzy.
A total frenzy. I mean, we're talking about massive ships suddenly pulling in over $200,000 a day.
Which brings us to our mission for this deep dive. We're looking at sources from Splash and Splash Extra to figure out if this is just a temporary spike or...
Oh, if the long-awaited supercycle is actually here.
Right. And to figure that out, you really can't just look at global oil demand. You have to dig into the specific mechanics of the fleet.
Which the sources are actually calling the Singapore era.
This is where it gets really interesting for me. We usually talk about market forces as these abstract things, supply and demand.
Yeah, but here they're pointing the finger at one specific company, Sinocor.
The South Korean Merchant Marine Group.
Exactly. This isn't just general market tightness. Sinocor has executed a massive, highly aggressive fleet buildup. Over the last 3 months, they have just been hoovering up VLCC tonnage.
The numbers rumored in the reports are kind of wild. Like they might control between 24 and 34% of
The tradable compliant fleet.
Yes. But let's actually clarify that term for you listening. What exactly counts as the compliant fleet here?
So it refers to modern vessels that meet current environmental regulations, and importantly, they aren't tied up in long-term contracts or sanctioned trades.
Basically, the pool of ships actually available to hire right now.
Exactly. And if one player controls a third of that available pool, they have massive leverage.
So it's effectively a cornered market.
Essentially, yeah. Ga Hyun Chung, the leader of Sinocor, is being compared to historical tanker titans like DK Ludwig or YK Pao.
Wow.
By consolidating that much capacity, he shortened the list of available ships. If you are a charterer and you need to move 2 million barrels of crude, you really don't have many alternatives. You pay Sinocor's rate.
And we are definitely seeing those rates show up in the data now. Splash Extra noted this is the best February on record for VLCCs.
The spot rates, the price for just a single voyage, are eye-watering. The Middle East to Singapore route recently hit over $161,000 per day.
And that isn't even the ceiling. There was that report about the Zodiac maritime vessel.
The Red Nova.
Right.
Yeah, that was fixed for a voyage from Brazil to South Korea at a record $214,000 per day.
Why is that Brazil route commanding such a massive premium over, say, U.S. Gulf exports?
It's a mix of distance and availability. We're
Yeah.
seeing a real geographic shift where Brazilian freight rates are topping the U.S. Plus, you have to factor in the risk premiums due to the ongoing tensions in the Middle East.
It all compounds.
It really does.
Okay, but spot rates could be volatile. They could crash next week. What about the long-term confidence?
That's where the time charters come in. There are rumors of Trafigura signing a 1-year contract at $135,000 a day.
And that is up significantly from the recent $110,000 benchmark.
Exactly. So Trafigura is betting millions that these high prices aren't going away anytime soon.
And that confidence just spills right over into asset prices. When a ship can earn $200,000 a day, the value of the steel itself skyrockets.
Which creates a serious dilemma for the owners, doesn't it?
Oh, absolutely.
You have an asset that is suddenly worth an absolute fortune. Do you sell it and cash out now, or...
But you keep trading to chase those massive daily earnings.
It's the classic agonizing dilemma. And while other tanker classes like Suezmax are doing well, the VLCC is the undisputed star of the show right now.
As one CEO put it, the sector is defying gravity.
Defying gravity. Spot on.
So to wrap this up for you, we have a supply squeeze engineered by Sinocor, record-breaking rates on the Brazil runs, and major traders betting long on high prices.
It's a historic boom. But I want to leave you with the big question mark hanging over the entire industry right now.
Capital discipline.
Exactly. When an industry is this flush with cash, it usually attracts a flood of new equity. People rush to build new ships, and eventually they overbuild and kill the market.
It's a cycle.
Always. So the real question is, will the industry actually remember the painful lessons of past crashes?
Or is the allure of $200,000 a day just too strong to resist? Something for you to mull over. Thanks for joining us for this deep dive.